Monday, December 27th, 2021, Monaco 64, home of alternative economics and contrarian views. I'd love to bring great news about the economy, about how the UK government is allowing the economy to flourish. But unfortunately, I can't. It looks like the UK government is pushing the UK economy off the cliff. And it might sound outrageous. Some people might say, oh, it's incompetence. But I don't think so. I think people give him too much credit for being incompetent. I know that sounds weird, but of course there is incompetence, but this looks like purposeful wrecking of a sector of the economy that is so important, not just for consumers, but for the whole of industry, because we all have to use energy, not just households. And those of you who have been following me for a while know that I've been saying that the UK economy is on the brink of collapse. I did a part 1 video in July, a part 2 video in September, and I think we're really close. And I've seen a couple of stories here that make me think they're doing this on purpose. And I would say the scaremongering that's going on about this variant is partly to do with that. And you might ask, why would they do that? Why would they want to bring down the economy? Well, because they want to wreck it, because they've taken out pretty much as they can from you and I through money printing, through government spending. How does the government spending take away from us to them, to the 1%? Well, because the 1%, they're connected to government, they're connected to the Tories. It could have been Labour as well. It doesn't really matter. They get the huge contracts. They call it waste, right? But that money goes into other people's pockets, and the country's been wrecked. We've got so much debt. There's no way out. And yes, they're trying to bring about their great reset to change the economy. They're pushing us into this digital authoritarianism. I don't think it will work, but nevertheless, it doesn't look good for the economy. So the two stories that I've seen, one is in the Telegraph. It came out last night, December 26th, and it says UK energy sector faces crisis similar to financial crash. That's the '08 crash. Top boss warns. So that's not me. And before I go into the story, just show you here, I've told you about Javier Blas. He's a Bloomberg energy correspondent, and I follow him on Twitter. And this is what he tweeted out. I think it was December 23rd. He says, you couldn't make it up after nationalizing Bulb Energy. So Bulb Energy was the 7th biggest supplier in the UK. I think over 20 suppliers have gone bust since August. So it's a real crisis. He says, yeah, the UK government is making the same mistake that helped take down the nation's 7th biggest supplier in the first place. It isn't hedging and just buying on the spot. So, and this is what it says here about Bulb. And he took this from the Bloomberg terminal. It says the energy firm, that's Bulb, currently run by special administrator, isn't buying power and gas in advance to shield its finances from rising prices, as Treasury, that's the UK Treasury, rules won't allow the government to hedge. I guess they can always print the money or borrow the money from the Bank of England and put us more and more into debt to cover their losses. said people familiar with the matter who asked not to be named, surprisingly, because the details are private. Well, it's not really private, I would say, because it's public. The Treasury is working for the public. It shouldn't be private. But anyway, Bulb's employees are also being paid, listen to this, higher salaries. So they wrecked a perfectly normal business that is not really hard to run. And I would say, of course, it's partly the fault of the government. They've put this energy cap on these companies selling to the consumer up until April next year. So the government is partly to blame, but these guys who are being paid higher wages or salaries now by the administrator, Tenio. So yeah, these are the people who partly wrecked these companies because they didn't hedge. They knew there was the cap, so they could have done something. So they're being paid more now with our taxpayer money to administer this bankrupt company. While the excuse is that they want to seek to retain the staff needed to run the firm. I think that happened during the '08 crisis with NatWest, or RBS at the time it was called. They had to pay up those bankers so they wouldn't leave to other banks because the government took over them. It's pretty disgusting. So that's really bad. And now you hear that one of the top energy bosses is saying that we face a similar crisis to the '08 crisis, but this in the energy sector. And of course, the energy sector, as we've seen in the last few months, is not just household bills, utility, electricity bills, and gas bills. It's also how it affects all other industries. We saw fertilizers. A fertilizer company had to be bailed out, an American one, by the UK Treasury because of higher gas prices. And also industry, they need energy to run as well. Their energy prices are going to go up. So let's go through this article in the Telegraph. It says energy bosses will hold crunch talks with Business Secretary Kwasi Kwarteng on Monday, today, to try and avoid further collapses. I have to say the way they're running the companies that have gone into administration, or Bulb, I think that's the only one that has had to go into administration. So all the other companies that went bust, their customers have been taken over by the companies that are still around. But when Bulb went bust, these other surviving companies said, well, we don't want to know. So that's why the government had to take over them. So Britain's energy sector faces a crisis similar to the 2008 financial crash. The boss of a leading supplier has warned ahead of a crunch meeting with Business Secretary on Monday. Stephen Fitzpatrick, well, at least he gave his name. Some people don't like to give their names, like we saw in the other story. Boss of OVO Energy, Britain's second largest energy supplier, compared the current situation with the delay between the collapse of Northern Rock in 2007 and the downfall of Lehman Brothers a year later. Northern Rock was a building society here in the UK that went bust. I don't think we are at the end of the energy crisis right now, he told the Telegraph, warning ministers and regulators have just weeks to act to avoid further company failures and devastating price increases. Why even more devastating price increases? Well, because if more companies go to the wall, there will be more liabilities to cover. Plus, I guess you're going to also get the higher energy prices. I think, unfortunately, when things are bad like this, they keep getting worse. I don't see any let up in the energy market. Anyway, his comments come as energy suppliers head into crunch talks led by Kwasi Kwarteng on Monday to discuss reforms to the market in a bid to avoid further collapses. I think these reforms, these actions, they already should have been taken care of months ago when this started, but the government is just sitting on its hands. I think it's partly because it's worried about only one thing. And I think you know what that is. I even got a text yesterday about it from my mobile phone provider on behalf of the government. I think you know what I mean. The only thing they're worried right now is that medical procedure. As Ravi Faber said, it's akin to building a Tower of Babel, and that's the story of the Tower of Babel. The message is you can't focus just on one thing because you will collapse society, and that's what they're doing right now, whether it's by design or by incompetence. It's up to you to decide, but either way, it's going to happen, in my opinion, unfortunately. UK gas prices touched a record of 470 pence per therm last week after months of unprecedented highs amid a supply squeeze. Well, Kwasi Kwarteng said a couple of months ago, oh no, don't worry, energy prices are going to come back down. But they've continued to go up, Mr. Kwarteng. The cost of energy has been driven up by low levels of storage in Europe and lower output from clean energy sources, in part because of weak wind speeds. I would say as well, and I've spoken about this, and I'm going to put some videos up from the cards, how this net zero carbon policy is driving up carbon emissions prices, which pushes companies and businesses towards natural gas because it's the least polluting of the fossil fuels. As suppliers are forced to shoulder increased prices, since the price cap prevents them from passing costs onto their customers, more risk being driven out of business. A total of 26 retail energy companies have gone bust since August, while Challenger Bulb, the one we just spoke about, the UK's seventh biggest provider, has entered special administration. Bulb did not comment. No wonder they didn't comment, because this special administration is far from being special. It's a special administration to make things even worse. Last week, executives at EDF, Good Energy, and trade body Energy UK urged ministers to step in following the surge in wholesale gas prices, with many on the brink of disaster. Well, I would say EDF is the French government because it's owned by the French government. So I don't see why the UK taxpayer should help a French company that's owned by their own government. Leave it to the French government. Ask the French government for help. I think it is a likely scenario that there will be more market failures, more companies going bust, said Mr. Fitzpatrick. I'd say anybody that survived through this stage has obviously been doing something right. Millions of households are expected to be hit by the soaring energy costs. However, when the price cap is raised next spring, analysts at Investec have warned the average cap bill could rise more than £700 per year to £2,000 in April, roughly £60 extra per month. This would be 75% higher than it was in September. You could argue, yes, that's helping consumers right now, but I think it's given them a false sense of security. I don't know how many people are following this very closely. Hopefully you are, because I've been warning about this, and you've been preparing for this, and you know what's going to happen in April. But if they had lifted this cap, people would have probably had some time to get ready for it. The increases would have been a little more gradual, and I think things would have been not perfect, but people would have, the public, the general public would have realized there's a problem. They're trying to hide this problem, I think, and it's going to hit people really hard because it's going to be a shock to them come April. Mr. Fitzpatrick, who said he has been in discussions with Mr. Kwarteng in recent days, argued the way things are at the minute, everybody's losing because the market structure as it is isn't fit for purpose. We simply haven't seen any action from the regulator or the government to address that. I think they accept there is a problem. They've just been really slow in finding a solution, and I think we really do have a short period of time to fix it. He warned a price surge could cripple consumer spending, well, and also industry as a whole, Mr. Fitzpatrick. Another energy firm boss told the Telegraph that ministers should remove the price cap entirely. So it's not me just saying that. It was introduced, yeah, because the price cap, aside from surprising people in April when it's eventually lifted, has already resulted in the bankruptcy of 26 of the energy suppliers. And the less energy suppliers there are, the less competition, and also the present existing suppliers, they're going to have to take over a lot of the liabilities from these old suppliers that went bust. That's going to be passed on to you and me. It was introduced to prevent customers being taken care of. It's clearly no longer fit for purpose, they said. It is perverse that those rescuing orphan customers of poorly run, loss-making business can't pass on very real costs. A government spokesperson said, "We regularly engage with the energy industry and will continue to ensure that consumers are protected through the energy price cap, which is insulating millions from record global gas prices." Yes, government spokesperson, you need to listen to the energy companies. Yes, you might be protecting consumers right now, but you're destroying the energy sector by doing this. And pretty soon there will be probably a huge increase in prices. You're just delaying the inevitable instead of working it out gradually. Meanwhile, crunch talks come as Navin Burujurdi of Wood Mackenzie warned of a potential windfall tax for North Sea oil companies on the back of surging profits. So this is a different story here, but the government is talking about taxing oil companies that are doing really well from this move higher in energy prices and oil prices. You don't see government talking about these, how can I say, windfall taxes on the bankers, do you? They're making like bandits in the last 18, 20 months because of all the easy money, but you don't hear them talking about a windfall tax on Barclays or the big City of London banks, do you? So, yes, I have ranted this morning about what's going on. What can we do? Well, it's very hard. I don't have all the solutions. I would say the less government interference there are in markets, the better. And this is an example of what happens when government gets involved, when governments put price caps supposedly to help consumers. It makes it even worse. And I guess you have to blame the government of Theresa May. I think they're the ones who imposed that. Apart from that, you just need to be aware. I think that your costs are going to rise even more next year, and you need to prepare for that. And you are the only person who knows how to do that. I can't go into each person's household and tell you what to do. But yeah, maybe saving for a rainy day, living within your means, and being aware that this is not going to get better. So now let's look at where the markets are this morning. It's 20 to 9 a.m. London time. We've got spot gold at 1806. It's down just over $2. Range has been 1812 to 1805. So we're down slightly. Spot silver is down about 0.2% at 22.71. We did trade over 23 overnight. High's been 23.02. The Dow future is down 33. NASDAQ future is up 25. S&P future is up 3 points. The FTSE is down about 8 points. To the currencies, sterling is up 0.1%, 134.04. The euro is unchanged, 113.13. The dollar is up 0.25% versus the yen at 114.63. The dollar is unchanged versus the yuan at 637.39. Aussie dollar is unchanged, 72.20. The dollar is up 0.1% versus the Canadian dollar, 128.20. And the Kiwi dollar is down about 0.1% at 68.01. To the general commodities, we got WTI crude down about 0.5% at 72.81. High-grade copper is down 0.75% at 4.35. U.S. natural gas is down 3.5% at 3.70. I think the European natural gas market is closed right now. I will update you on that pretty soon when I get some more information. And to finish off, just a quick look at the 10-year yield. It's down 1 basis point at 1.48%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.